The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome, folks, to the Money Masters Show. I'm your host, Steve Rhodes. Thanks so much for joining us as we begin this hour here. We've got the Dow is up 7 points. The composite down 20. S&P's off a point. Russell 2000 struggling a bit. That is the leader in the, the composite is the leader in the clubhouse on the way down about 0.7% right now. The Russell 2000 just behind them, down 0.4% off, $3.60. You've got Google down $2. Apple is up $2 right now. Microsoft down 31 cents out there. Our calling number is always 877-927-6648. Would absolutely love to hear from you. And make sure, folks, you go over to the homepage of TFNN.com and sign up for our Great Panther Silver giveaway. We're going to be giving away silver this hour and every hour on the hour through Friday, and it's easy to do, and we certainly would love to be able to give you the gift of silver. Let's begin our session as we do during the Money Master Show by taking a look at the indexes out here, meaning the cash indexes versus the futures markets, as we do on the Trader's Edge Show. As we take a look at the cash indexes, we're going to start off with the New York Stock Exchange. As we were taking a look at that yesterday, what I pointed out to everyone, and we were taking a look at, if you're watching us on Tiger TV, thanks so much for doing it. Maybe you're listening on the radio, and thanks for listening to us as well, or maybe it's your mobile device at tfnn.mobi. And if you would like to see our charts, remember we stream live to your mobile devices. If you go to the homepage at tfnn.com, over on the right-hand side, you'll see those three little smartphones. Click on one of them. Click on the actual icon itself, the entire thing, and this show will stream live to you. If you're listening in, if you're driving, or you can't get the stream of this, remember, you can always watch the archive of this show later on Tiger TV on Channel 10. And what we're taking a look at, two 1.618 butterflies. We're taking a look at the smaller one completing really yesterday, 89.15.31 was the number. What the New York Stock Exchange got up to was 89.0465. But you see, once you get, this is just really the range, folks. We're not using this as exact numbers. And the New York Stock Exchange, which has been super strong here off of these last few moves that we've seen in the marketplace. And what I really mean by that is the retracements have been relatively minimal out here, having a nice 1.618 expansion off of swing points. And yesterday, the New York Stock Exchange, yes, it did give us that key reversal session. And a key reversal session, just to remind you, folks, those are as I say, they are reversal sessions. You got to have three things take place. Intraday, you need to exceed the high and the low of the prior candle. Number two, you need to be in extended condition. Well, we know the New York Stock Exchange, if you're looking at my chart, you take a look at the relative strength indicator yesterday being in the 76 percentile area, and or the two sessions prior to that. We know that this market here is overbought, and so it was extended. And then you need that third and final thing, which is a close in the opposite direction. Well, we had a red close yesterday, not just a red close. We had one of those bearish engulfing candles. You get some follow through this morning, or not this morning, but at the end of the trading session, and that is a signal that the retracement is about to begin. And folks, it's going to be deeper than what they're reporting in on the media and everywhere else that is out there. It is going to be a deeper retracement. It is not going to be a light retracement. At least that's what everything that I take a look at, contrarian indicators, which if you'd like to see what those things are, just go test out my newsletter service, Mastering Probability. All kinds of charts and other indicators that I share with subscribers out there, and it's all about reading the message of the markets. Now, just because that is what they show right then and there, I am willing to change my opinion as soon as we see the other signals out here. Right now, what we know in the New York Stock Exchange, you got a key reversal day. We'd like to go ahead. Well, if you get follow through, if you're bullish, you do not want to see follow through, because you got a key reversal day and a bearish engulfing candle. You do not want to see the New York Stock Exchange close lower today. If you take out yesterday's highs, well, the key reversal didn't reverse. It was putting it in fast-forward motion out there. But right now, you've got a pretty leading indicator suggesting otherwise out here. We'll see how this trading session ends. Right now, you've got the New York Stock Exchange trading out at 88.94.55 in overbought condition. It needs to pull back. Where's the first pullback on the New York Stock Exchange? Well, without a doubt, it's going to come back to that January 2nd gap. That means it's going to come back at least to the low, which is 85.7108. Now, if you take a look at just simply a normal retracement would be what? That's right, 0.618. That would be off of your 8-point, or really, that would be off of your November 16th low out there in the New York Stock Exchange. That was 78.4176, all the way up to the high of yesterday. That says sweet 618 would take you back below. That's right. It would take you back below December 31st. So what this really says to me is that the New York Stock Exchange most likely coming back to at least December 31st out there, 82.9836 in 82.50 is really your target out there. That's on the NYSE. Let's go take a look at the other indexes out here as we switch over to the other daily indexes, the S&P, the Russell 2000. Well, let's go start with the Russell 2000. Yesterday, and the Russell 2000 also in that extreme overbought condition here. Yesterday, forming a hanging man candle out there. That's after making a 1.618 expansion of a swing point. That happens to be the swing point of October 5th. Made to look like about a 1.4 expansion. That's kind of a junior Fibonacci number out there off of the September 14th level. I'm going to go ahead and erase. Well, I didn't mean to erase that, but I did. Let me put that back out here and just go ahead and get rid of the measurement of expansions and contractions between swing points out here. So yesterday, I guess not really a total hanging man candle here in the Russell 2000, almost more doji-ish like, and you are seeing a little bit lower. Now, yesterday, really was not, well, not really wasn't. Yesterday was not a bearish reversal signal on the Russell 2000. We might be getting that here today. Trading down lower, trading out the 903.25 mark out here. So the Russell 2000 may be joining in with regard to reversal signals. Let's go take a look at the other indexes out here. Let's take a look at the S&P 500. And the S&P 500, give me a second here. I want to go ahead. Also in that overbought territory, I want to remove my measurements. We know that the S&P 500 has made a 1.272 expansion, a butterfly pattern. Thought I got rid of that. And so we know that that is in an extended condition as we delete this. Okay, here we go. Yesterday, not a bearish candle. However, today, if we do see a close below, and this is for bulls and bears, this is what you want to be paying attention to. You get a close below 1494.82, and you will have set up a set of reversal candles out there while being at the overbought condition and while having formed a 1.272 butterfly. Where would that do? Well, if you just take a look at simple retracements from the lows of November 16th all the way out to the highs of yesterday and the prior trading session. 1404 would be the magic number. That would take you right back into the swing point from December 31st out there. Let's go take a look at the Dow. The Dow is the lead dog here in the hunt this morning. The Dow is trading up slightly. It's up about 21 points right now. You can see 1.272 expansion. I'm going to go ahead and remove those from these charts here as we take a look at it. And the Dow not making any kind of reversal signal yesterday. If anything, just a pause button. It hit that pause button. However, today, if the Dow were to close into... Actually, the Dow today, if it closed about halfway into the trading session of January 25th, I'm going to have to really benchmark this. Let's see. You were 13,825. And the high, 13,895. So maybe it's at about 70 points, about 35 points. The Dow closes down about 30, 35 points. We'll get a evening star candle formation out there in the Dow Jones Industrials. Let's go take a look at some of these. You know what I wanted to do? Rick had called in yesterday, and while we were on the show, he was asking me about the Bradley model. So I believe he listens in on this show. And so what I wanted to do here, because he was asking me about the Bradley model, I remember having done a chart, and sometimes the Bradley model, folks, is something that I just simply use as more of a guideline versus an actual turn date. I believe Rick had did mention that today might, in fact, be a turn date out there. And for those of you not familiar with what the Bradley model is out there, Donald Bradley published a book back in 1946 titled Stock Market Predictions and Prediction. And the science behind the book was the premise that planetary pairs such as Venus and Uranus had a positive or negative bias to the market. And since we already know, and it was taking a look at conjunctions, and since we already know ahead of time when those planets line up, he was able to go ahead and map out when we should see market turns to the upside or to the downside out there. But Bradley's model is best used as a guideline for trend analysis, not necessarily for market turns. And so I want to show you the version of the Bradley model that I did. We're going to take a look at the Dow Jones Industrial. And we're taking a look at across the screen here. You're going to take a look at some red squiggly line. That is actually the Bradley model overlaid on my chart. Now, what I have done in order to try to match up, since this is just a trend here, what I have done is I tried to match it up by moving it back 3 weeks. I found that by moving it back 3 weeks, what we were able to do was get some pretty good correlations. What do I mean by correlations? What I mean is by trying to identify where the Bradley model actually lined up with highs and lows. So the red line, again, used as a trend line, I'm going to come back to the time frame of the of October of 2011. So you're going to see these correlations have lined up pretty well. Not always on the mark, but pretty darn close. And when something is pretty darn close, it says probably you ought to be paying attention to it. So if you back it up 21 days, you'll see that the Bradley market, the Bradley model, I should say, in essence was making high. It's where my cursor is right here. It's this little yellow box out here. As it was making high, went ahead and said it was going to move down. Well, it moves down. If you take a look at that Bradley model, if you back it up 3 weeks, the low in the Bradley model would have come in right around the November 28, 2011 time frame. That's that next yellow box that's out here. Market is supposed to move up just like it did, coming into the highs here of October in 2011. Let's go take a look at the next high that was out here. It's in this time period here of March of 2012. As the market was moving back up into it, the market moves down. The next little high, the nice little spike high. And when you take a look at these lines here, you don't take necessarily, I don't try to measure the depth of the move of the line with meaning the depth of the move in the marketplace. Again, this is better used as a trending indicator, as a guideline for trend analysis, versus some type of equation of a dollar move out here. So if we come back into this time frame here, the market, in fact, was making a high back in May of 2012 out there. Take a look at the market, and it has come, uncorrelated, I would say. But if you back it up 3 weeks and you try to match highs and lows, I found that the best correlation with regard to the Bradley model has been just that. Take a look at the market moving off of a low from the August 2012 time frame. According to the Bradley model, it was supposed to be making a high back in September of 2012. Well, we know that, in fact, took place. Take a look at the Bradley model. How about that? The Bradley model moving down to some real lows back in November of 2012. Take a look at that. It most certainly did it. How about the market moves up and does a pullback into December? How about that? Into December 31st. Was also supposed to be making a low. The Bradley model here actually says the market may want to move up into the middle of February. At least that is on the Dow here. That's the Bradley model overlaid on the Dow. 877-927-6648. I'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show. Folks, the Dow up 37 points right now. Composite off 12. S&P's up a 1.5. Russell 2000 down a couple of points. And we've got our next winner in the Great Panther Silver Giveaway Contest. It's Chris of Greenwood Village, Colorado. Chris, congratulations as our next winner out there on the Great Panther Silver Giveaway. Chris, if you are listening in on this hour here or any time during the day, go ahead and give us a call. We would love to hear from all of our Great Panther Silver Giveaway listeners. Folks, if you haven't had a chance to sign up, please do so. Go to the homepage of TFNN.com and sign up for it. And as well, in the Colorado marketplace, we've got our man Daryl Martin and Tom O'Brien going to be out there on February let's see, I've got the date here. It's real handy. It is on February the 2nd in Denver from 8:30 to 12 at the Marriott Tech Center, Dynamic Trading Strategies. So as long as if you're in that area, go to the homepage of TFNN.com. It will be a great trading session out there from 8:30 to 12. That is Saturday, February 2nd out there. Let's see. Oh, we've got another winner from yesterday from our Great Panther Silver Giveaway. Let's go to Manjeet of Maryland. Manjeet, did I pronounce that properly?
That's correct. You said it quite well. Thank you.
Oh, that's great. Congratulations.
Thank you.
Oh, that's wonderful. That's a great way to start your day with a beautiful silver coin out there. And Manjeet, how long have you been a listener at TFNN?
Oh, a long time. Probably like since 2002 or so.
Oh, that's terrific. Well, we appreciate that. Is there anything you'd like us to look at for you while we've got you on the line?
Sure. I don't know if you were able to analyze the cues today on your show, but would you mind giving me your analysis?
Absolutely.
Okay, great.
Yeah. Are you in a trade, long, short?
Actually, I closed out a trade this morning.
Okay.
But having said that, I tend to go in and out of the cues quite often.
Yes.
I'm getting the feel that we're going to probably see a pullback to somewhere around the January 15th low of 66.33, at least
yes.
a test of that. But having
yes.
said that, I'd appreciate your analysis.
Yeah, so on the cues specifically, the cues have really a set of interesting patterns that are out there. Number one, made this really abandoned baby top if we were to take a look at the actual NDX 100, and that is one of the most difficult Japanese candlestick reversal patterns that can be formed out there. So the upper end of the cues, if somebody were to be long, you want to see that taken out, and that would be a close above that January 23rd level of 67.79. Now, the cues have been traveling in a sideways consolidation range really ever since that January 2nd gap up. And what has held it in with the resistance area is really the downdraft of the October 19th candle, which had 75 million shares of downside. So I draw a line across even though that's not really a swing point, the set of swing points, if you will, that have been set up are the most recent ones, which mark the consolidation. But if we take a look at what the cues are really going against, it happens to be that downdraft day, and that high is 67.27. Now, that area, with the exception of the one gap-up day that we had that created, in essence, the island reversal at the top on January 23rd, that area, the consolidation area, meaning the high of 67.27, has been the upper threshold of the cues. Likewise, the bottom of that threshold happens to be the low of January 2nd, the 66.48, and 70 million shares. And each time the bears try to break down the cues, even on jumping on board Apple, no matter who it is that they're trying to take down, that has not been able to bust through the low of that 66.48 level. And it's been so we've got a really well-tested support area, as well as a really well-tested resistance level. And what we've got two competing island patterns out here. The days of December 21st through the 31st created an island out there. We had a gap down on December 20th. We had a gap up on January 2nd, and it created a little bit of an island out there. So it qualifies as an island reversal. So you've got one at the bottom, you've got one at the top. This is the biggest tug of war, the biggest battle. This looks like a Muhammad Ali, Joe Frazier fight out there. It looks like it's going to go. It looks like Manjeet's going to go 15 rounds for us, and I don't know that we're in the 15th round. But what's cool about the patterns that we take a look at in the cues here is that all the lines of demarcation are really set up. So if you want to go short, I would say do it as it gets up to about the 67.27 level. If you want to go long, I would say do it as it gets down to about the 66.48 level. And then when it breaks either way, you're going to know whether long or short is the right trade.
Okay. Thanks, Steve.
All righty?
All right.
Hey, you bet. And congratulations again, and thanks so much for being a TFNN Tiger. Thanks for calling in.
Hey, bye-bye.
Just recently on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at 63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at 66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just one trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow up 27 points right now, S&P up 50 cents, NASDAQ down 15, the NASDAQ 100 off 13 points. And let's go back to the Thrilla in Manila. We're taking a look at the Qs out there with Manjeet from Maryland, one of our Great Panther Silver giveaway winners. And folks, we all appreciate those folks that call in on any of our shows, because always great to talk to you. Always great to talk to a winner out here. And so maybe we're just going to name this Qs chart here, after either the great fights of either Ali Frazier, or maybe it was that Sugar Ray Leonard Leonard and Tommy Hearns fight out there, or fights out there as well. You know, you've had one round where you've had at the top here, somebody won. It was a little knockout punch when we had that. We had the island reversal up at the top, just like we've had a little island reversal down here at the bottom. We've been going 19 rounds since if we include the January 2nd time frame, where you've had price traveling sideways. So it is going to be interesting. So you've got energy here that is building up as we've had a sideways move out there, and you've got the competing top side and downside out here inside the Qs. As long as we're in the ETFs, let's go take a look at the other ETF structures out here and see what it is that we can see. Let's go take a look at the SPYs. SPYs yesterday creating that hanging man candle as the SPYs made a 1-to-1 A to B equals CD up. The exact number would have been 150.43. The SPYs got up to 150.33. That qualifies as a completion out there. Today, if you get the SPYs to close below the level of January 25th open, that would be 149.88, trading right now at 149.94. The way that I view things, the way that I read the message of the markets, that would be giving us a reversal signal in the SPYs. On the other hand, if the SPYs can take out the high of yesterday, that says the SPYs would like to move up to the 151.76 level. That would be the 1.272 expansion of swing points. And, of course, the swing points we're looking at are September the 14th, the high out there at 148.11, down to the lows of November 16th. The SPYs in overbought territory. That's not where you want to be jumping on board. You want to be jumping on board as that RSI level is down towards the bottom, at least level or lower, but not be jumping on it when it is up over in the extended overbought territory. No reason to do that. If you want to just be long, you don't like to short a marketplace, that's fine. Just wait for a pullback. What's the logical area for a pullback on the SPYs? It's certainly going to be the gap up, the test of the gap, which is going to be the low of January 2nd. That is going to be the 144.73. You start coming back into that with volume. With volume, I mean more than 191 million shares. That says be cautious, because it says most likely coming down to close the gap, which would at least be the high of December 31st out there, which would be the 142.56, or the 139 could come down to the bottom, 139.54 level. That was on our SPYs. Let's go round this off by taking a look at the diamonds and the small caps. The diamonds out here yesterday giving a TD combo 13 count out there. That is a stretch pattern. You get a close here. Quite frankly, if you get it closed below yesterday's candle period, the open, I actually like to use the actual, make it more of a stretch out here. You get it closed below 138.30 out here. That's giving us a reversal signal. The diamonds having made a little bit more than a 1-to-1 A to B equals CD up. The diamonds out here, most certainly in overbought territory. Natural pullback on the diamonds, just like everything else, would be that January 2nd gap candle. So that is on our diamonds. If you take a look at the 1.272 expansion, up just a tad higher, up at the 139.76 range so far in trading today. 138.91 has been the high. Yesterday's high was 138.88 out there. That is on the Dow Diamonds. Let's go finish this off by taking a look at the Russell 2000, the IWM. Yesterday forming a doji. Where at? The 1.272 expansion area. That number, 89.91. You had the IWM yesterday close at $90 even, Stephen, out there. Right now we've got some leaves falling off of the tree. You get a lower close today. That starts to give you a reversal signal on the small caps. Why is that important? Well, it's important because that, too, has been a strong index out there. One of the strongest, that being the Russell 2000, the IWM, as well as the New York Stock Exchange out there. We know the New York Stock Exchange gave us a reversal signal today. Lower close would be some confirmation. Right now, New York Stock Exchange doing all right, up 18 points, about 0.2% out here, but we are starting to see one by one things start to fall in place with regard to reversal signals. If we take a look at reversal signals out here, let's go into the currency marketplace. If we go take a look at the pound, talk about reversing, getting pounded. If we take a look at the Great British Pound, U.S. dollar currency pair, beautiful set of patterns out here. Number one, if we take a look at the retracement off of the lows in the pound, you'd be coming back to the June 1st level, right at that 1.536 level, all the way up to the high that was put in on the pound here on January 2nd. What you would see here is that what happened yesterday, intraday, what happened yesterday, the pound gets down to the level of 1.5674. Folks, 1.5679 was the .618 retracement. That is a thing of beauty. You talk about markets, whether it's currencies, whether it's commodities, whether it's ETFs, whatever time frames you trade on, and being aware of your Fibonacci retracement and expansion numbers. Just another great example. Now what do we have in today? Look at yesterday's action. As the pound moves down into sweet 618, where does it get to? Just take a look at that relative weakness indicator out there. That's right. Gets down into that extreme level. Let's go see what the actual number was. We'll put that up here on the screen for us. We'll come back to it as it moves its way down, gets into that oversold territory. 2656 is the magic number. Today, getting a bullish engulfing candle out here. In fact, if today's session closes above 1.5758, you will have had a reversal near an oversold territory. This, folks, is what it is that you want to be using for trading. In fact, I'm going to be doing a 1-hour special. It'll be free. We'll have the details, I'm sure, up on the TFNN homepage sometime over the course of the next week here, perhaps by Friday or maybe even earlier out there, because I want to be able to teach you how to be able to put together the candlestick patterns. I want to be able to teach you how to put together the relative strength index for your trading out here. This right now is setting up a pretty nice long trade inside the Great British Pound U.S. dollar currency pair. And it's a beautiful thing, folks, because we've got another winner on the line. We've got Chris. Chris, thanks for calling in. And, Chris from Greenwood Village, Colorado. Congratulations on winning the Great Panther Silver giveaway.
Hey, thanks, Steve.
Hey, our pleasure. So thanks for listening. How are things out in Greenwood today?
Yeah, we had a little dusting last night, a little bit of snow. Could use some more, though, but it's all good.
Yeah, how are the skiing conditions out in Colorado this winter?
Well, over the holidays, they were good snow, but very cold, and now we're just trying to keep the snow. It's been a little more mild. We had 60-degree days just a couple days ago. So.
Did you? Okay. Which isn't too unusual, I suppose, this time of year for Greenwood?
It's nice to have that in the middle of the winter every once in a while to kind of break it up.
Absolutely. Chris, how long have you been a listener at TFNN?
Oh, a long time, a good dozen years.
Oh, wow, that's great. So a dozen years ago, how did you locate us at TFNN? Did you live out on the East Coast and you moved out to Colorado?
No, what was it? I was on a business trip. I think it was down in Florida, and I heard Tom on the radio. This would have been in Orlando, I think. And
okay.
Anyway, I got back here, tracked him down, and been listening ever since.
Well, we appreciate that. So you heard that little growl, and you said, "What is this?"
Oh, yeah. The wife couldn't stand it, but she goes,
"Oh, that's great. Oh, that's great. Anything you want us to look at on a stock chart for you as long as we got you?
Well, sure. I'd like to take a look at Devon Energy. Is this thing carving out a bottom here?
All right. So, and the ticker
play.
the ticker symbol on that is what? DVN? Is that what it is? Or
DVN, David Victor Nancy.
All right. So, whoa, what the heck happened? Give me a second here. I got the black screen of death out there. There we go. Okay, now we're taking a look at it. Give me a minute here to put up a couple indicators. We got Devon Energy right now trading out at 55.81. Are you in this equity? Looking to get in?
Looking to get in. Don't belong.
Okay. All right, so we're going to give me a minute here just to put a couple other things out here. So as we take a look at Devon Energy out here, maybe one more minute. No, I can do without this other indicator. So trade out at 55.83, formed a bottom out here with a nice bullish engulfing candle back in December 31st, 2012 out there, and it did put in it gave a nice indicator. In fact, one of the things I'm going to be teaching folks and utilizing the RSI and the candles out here really gave you a nice signal there on December 31st to go ahead, and that was certainly a nice point of entry. Now, the blue line on the chart here happens to be that 9-day exponential moving average, made really popular by one of our counterparts, Basil Chapman. He'll be up next here, and this thing has been dancing along the top of it. Now, what Devon Energy is doing right now, it's getting ready to test this little supply line, this little downdraft here from November 7th. So you've got 9.7 million shares to the downside, but what it's doing, let's see if it's taking out a B point with volume. Little small A to B equals CD up, Chris, which would take a look at the January 7th high at 55.02, has 3.2 million shares out there. Today so far in trading has done 1.6. So it looks to me like this is confirming an A to B equals CD up. 1-to-1 A to B equals CD up on this would take you into about the 57.33. Looks to me more likely what it would want to do is move up to about 58.47. When you get up there, when price would get up there, if that's where it's going to travel to, it's going to move into the overbought condition. It's going to get up to the top of where it last broke down on November 7th, which is up at the high of 58.72, and looks like it'll run right into that 200-day exponential moving average, and that has held things in check to the top side. It did that back in September of 2012. It did it again as price tried to move up into October 7th. So it looks to me like that's where she wants to run to, in about that 58 level before it decides to go ahead and pull back. Does that help you out?
Yeah, it's a good rundown. I'm thinking that a lot of these natural gas producers might be in a similar situation. This guy got chopped in half, and is the bottom end, I guess, is what I'm trying to figure out.
Well, I tell you, most certainly did. Good point. This was trading in the 130-ish range back in the July 2008 timeframe, and got more than cut in half, came down into about the $40 range all the way back in March of 2009. No question that this is making, lower highs out here, but right now, take you up in about that 58.46. If you're looking to be a buyer of this, your best buys on this have been as it's moved down into the lower range of that relative strength. But there's a nice divergence that it had as you came back into December 31st, and a nice bullish engulfing candle, and that really was your trigger to have taken a long position then in Devon Energy. Don't know about whether the reward to risk is worth taking it now or just watching for a similar setup in the future on this or any other equity that you trade.
Hey, thanks, Steve.
Hey, my pleasure, and thanks so much for calling in, and congratulations again on being our Great Panther Silver giveaway. Look forward to speaking to you again. Have a great day and a great week.
You bet. Thanks. Bye.
All right, let's go take a look at some of the sectors inside the S&P 500. We were looking at some of those yesterday. Let's start off by taking a look at the XLF. Why is that important? Well, that's important, folks, because yesterday the XLF, after making a 1.618 butterfly, that had a key reversal day. Something to think about. Made a doji candle here on the January 25th out there. Had a little bearish engulfing. You can see yesterday the high and low exceeded the prior day's candle. We know we're in extended condition. The XLF getting into overbought territory, also having that 1.618 expansion out there. Right now trading out at 1742. But when strength in the marketplace starts to give you these signals, time to make you say, something to think about. Let's go to Orlando, Florida, to our man Rick, who wants to take a look at the bulk shippers. Rick, thanks for calling. Thanks for holding. How are you this morning?
I'm doing fine. Thank you for taking my call, and thanks for everything you do, Steve.
Oh, my pleasure. My pleasure. So you're looking at dry ships, and are you in? Looking to get in?
I ran out of patience this morning, and I said, well, maybe this is he made about a 3.382. And so I said, okay, it's time, so I jumped in.
All right, well, congratulations, you're in the money.
Well, I am.
You're in the money if you...
And it looks like his 1-to-1 expansion will put him up into that candle of September 19.
If we take a look at it, this is a beautiful hammer candle, folks. If you want to see a nice looking hammer, you go back to November 16 on dry ships, ticker symbol DRYS. We get back from break. We're going to go back out to Rick. We'll take a look at the A to B equals CD patterns. We'll take a look at the overbought, oversold conditions on this equity. You too can get in on the action. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow up 37 points right now. S&P's up 2. NASDAQ down 10. We're going back out to our man Rick in Orlando. We're taking a look at dry ships, one of the bulk carriers out there that had some nice explosive moves back in the, they all did, all at the same time, back in the early part of January. January 24th, dry ships up with 28 million shares. So that is a nice move. Rick is in the equity, got in this morning. And so there's a number of things that I would be taking a look at today specifically, Rick, for you. Number one, I would be paying attention to the 200-day exponential moving average. Dry ships has been trading below that level really ever since the May of 2012 timeframe. The last time that it got up here was back in September 19, 2012. Had a little doji candle, and the leaves fell off the tree the following session. Right now, it's trading just above that level. The exponential moving average, 200-day, looks like it's about $2.27. You're at 232. If it closes below the 200-day right there, it might be giving you a little bit of a signal. That would be one. So I'd mark that down to take a look at the end of the trading session. The second one, it's trying to take out a swing point, which would be your January 7th swing point. That's got 14 million shares. That high is 226. If it closes back below it, you'll have a rejection of a swing point on lighter volume. That might be also giving you a signal that this could come back and pull back to the last swing point. If you can't bust them up, as Tom says, it'll try to bust you down. That would send you back, to the $1.92 level. So that would be a second place that I would take a look at it. If it does get up over with volume, so it's over the 200-day, it gets up over that January 7th swing point, maybe that sets up a new A to B equals CD. The A to B equals CD pattern that it has completed this morning, which is a 1 to 2 A to B equals CD, comes off of that hammer low from November 16th. The $1.46 run up to the high on December 17th of $1.85, and then the pullback, and that was really your buy signal came in, not on December 31st. Your buy signal on this actually came in on January 2nd out here. Of course, on December 31st, this thing moved down nicely into the relative weakness area, getting down into the 30 level, 31.03 level. You had a nice set of candles out here to give you a trigger to go ahead and take some action on this equity. The third area, or the fourth area, I don't remember how many I've given you. I'd pay attention to that 9-period EMA, that Basil teaches us to pay attention to. It's been walking that line pretty well. It's closed below it on 2 candles, the last pullback, which was January 15th as well as January 16th out there. So I would say you don't want to see it close below that. That's going to be about $2.27. Looks or $2.16. Looks like $2.16 out there. So those are really the parameters that I would be paying attention to. You get a close above the 200-day. You get a close above January 17th, and this may go ahead and travel up to the swing point area of around 255 out here. But be careful. Okay. At least that's what I'm looking at it.
Yeah, especially since I tuned in to you after I pulled the trigger, and you were noticing increasing amounts of RSI penetrations above the 70, and the other things you talked about. I looked at the financials, the big ones that make up, and yes, it's getting weaker and weaker out there, isn't it?
Well, there's enough signals out here that say caution. There is going to be a correction. And at least that's what there's enough other indicators out here, enough contrarian indicators out here where significant market tops have been made. They're not reporting that if you watch CNBC. They don't talk about those things, but there's plenty of them. And not like one or two, like 2 handfuls of them that say, look out. So just means be careful, means use tight stops. Hey, thanks so much for calling, Rick. Stay tuned, folks. Basil Chapman is up next, and thanks so much for being here with us. Look forward to seeing you in the morning. Have a great day, folks. Take care.